Well, it's been a rough ride on the markets today. For his take, I spoke to Marcus Padley from Patersons Securities. Marcus Padley, a third day of declines. It seems this is very much a glass half empty.
Yes, suddenly, Tiki, after a 9.9% rally over the month of July, or last month really, we have suddenly come off top. We're about 200 points off the top and into the results season, and suddenly everything that goes wrong or could go wrong is being treated terribly. The US market as well has confirmed what a lot of us have been thinking for a while, which is really that the US economy is really not continuing to recover. Seems to have stalled for the moment. You're seeing downgrades in US GDP forecasts from a number of economists at the moment. Their second quarter GDP number is up 2.4%. I saw one economist forecasting that that will be revised down to plus 0.3%. It's almost back in recession. So fears of a double dip, and China's economic numbers this week haven't been too strong either.
Now, buildings product company James Hardie has returned to profitability, but it was treated very badly by the market. Is that its connections with the US as well?
Very much so. It's confirming what we're worrying about in the main market at the moment. They're saying the US housing market remains very tough. They expect to see lower volumes in the US housing market next year compared to this year. That the recovery that they saw in the first 4 months of the year has stalled. That new home sales in June have been the lowest since, or second lowest since 1963. So the message is, yes, the US recovery isn't going anywhere, and in light of that, James Hardie got smashed today, down 7.5%.
Now, any key stocks moving forward on the day?
Well, it's fairly predictable, Tiki, although I don't think individual investors should ever buy defensive stocks, because you just lose more or lose less money than you do in the market. But defensive stocks doing a little bit better. You know, things like Woolworths are up, and Lion Nathan, that sort of thing, as some of the institutions maybe rotate money into defensive stocks. We also saw Sigma Pharmaceuticals, Illumina, both up on bid talk. And Myer, of course, had their quarterly sales numbers, which were generally seen to be good. They've been doing a lot of discounting. They say they're going to stop doing that. But the sales were up on the year, which was seen as a fairly good result. And the share price has moved up, and all those employees and Myer One shareholders that took the stock in the placement are only $297 million underwater, so an improvement.
And we've got some negative surprises coming forward with the profit results, Computer Share, Telstra. Is that changing investor strategy at all?
Yeah, very much so. The confession season is supposed to get all the bad news out of the way, but what we found coming into this week of results, that Computer Share surprised us yesterday, fell 11% on results. Telstra was obviously down 8% or so to 9% today. James Hardie as well. The game in the market at the moment is avoiding losing money, avoiding the bombs that are going off. With the market having changed trend, it's not about making money, it's about not losing it. So, yes, we've been going through all our portfolios looking for stocks with high PEs and low yields that really can't afford to disappoint you at all on results, because they'll get smashed, and I think that's the strategy at the moment.
Marcus Padley, thank you very much for talking to Late Line Business again.
My pleasure, Tiki.